Hey, good morning. And this is Anthony Parent of IRS Medic, and I want to welcome you to our show today. This is going to be a fun one, I think. This was sparked by a conversation I had last week. And if you joined us last week, we were talking about some proposed regulatory relief the IRS was considering, or Treasury was considering, for foreign pensions, foreign tax advantage pensions. And the conversation went something like this. I was talking to a new friend of mine. I have a new friend, gentlemen. He's a Swiss attorney, Olivier Thew. I was talking to him last week about sort of this issue about that we had, that the IRS is giving relief to a way to not have to report your foreign tax advantage pensions on a form 3520A, 3520. These are onerous forms that are required, and the penalties are large, and they're very difficult to figure out how to get right. I was having this conversation with him, and I was explaining that these proposed regulations actually didn't seem to do too much because, and we were talking in regards to Swiss pensions. I said, Pillar 2 and Pillar 3 both allow for additional contributions into the plan. Therefore, this doesn't apply. And let me do a screen share, and I can show you that right here in the regulation. So let me just share my screen. You guys are going to see exactly what I'm talking about. These are John's slides right here, but this is here's a proposed regulation. Okay, where I'm at, and I had to go way down to a section here, and it says generally only contributions with respect to income earned from the performance of personal services are permitted. Okay, and this is defining what type of foreign foreign pension plan doesn't need to file a 3520A. Well, this takes out Swiss Pillar 2, Pillar 3, Australian superannuations, and I believe nearly every tax advantage foreign retirement plan I can think of, because they all allow additional, as far as I know, and commenters, please correct me where I'm wrong. My belief is that most of them, if not all, allow for additional contributions from income that is not earned. That is, you could take you could sell a car and you could put that income into a foreign retirement plan. That is my belief. So this relief doesn't really seem like it does too much. So I was explaining this to my new friend Olivier, and then he said, Anthony, I got to just tell you something. He said, there's no trust in Switzerland. Trusts don't exist. It's not a legally recognized entity. There are no trusts. You can't have a trustee. You can have none of that. And so I said, well, what are Swiss retirement plans? Well, he goes, well, we just call them contracts. It's just a retirement contract. That's all it is a contract. It's not a trust. And so that really got me thinking about what was going on here. Why is the IRS going through all of these trouble to create a proposed regulation that doesn't seem to really help anybody? Because additional contributions are allowed. So I went to the regulations to see, well, what exactly is a trust? Okay. And so here's the regulations to define a trust. And ordinary trust, and here it is, the term trust is used in the Internal Revenue Code, refers to an arrangement created either by will or inter vivos declaration. That's when you're alive and you make a trust. That's what that means. When trustees take title to property for the purpose of protecting and conserving it for the beneficiaries under the ordinary rules applied in chancery, that's your Delaware court, or probate courts, and those are your probate courts in the U.S. Usually the beneficiaries of such trust do no more than accept the benefits thereof and are not the voluntary planners or creator of the trustee arrangement. I'm going to stop there. So that's what we have for a trust. Now, there's other definitions of types of trust. There's a business trust, which actually isn't a trust. It's just a conglomeration of business interests that you have. And then there's certain types of investment trusts that the law exempts. It says, oh, that's not a trust. If the nature of the investment can be changed, that's also not a trust. And when we go down here, we have a few more examples. There's a liquidating trust, and I think we can all agree a foreign pension plan is not that. It's not a liquidating trust, and it's not an environmental remediation trust. So my discussions with John last week, I said, John, this doesn't seem like a trust to me. And John said, yeah, no, it's not. These foreign retirement plans are not created for this purpose. Now, and I think this is where a lot of the confusion adds in here, is because there's another regulation that distinguishes between foreign and domestic trusts, right? But the problem with this is, I think, where people go, this is where it gets crazy, is people forget about the underlying definition of a trust. That is, a trust has to be formed to protect the interest, like what you say with a trust document. You don't create a trust by not creating a trust. You don't create a trust by getting a retirement plan. You create a trust by creating a trust. That's the point. And so we have this, and that's so here's the distinction between a domestic and foreign trust. And by the way, you could have a U.S. based trust that's actually foreign. That's one of the confusing aspects of this. So we have this foreign and domestic trust, but this is what, in my experience, people look at, but they don't look at the underlying regulation which defines trust in the first place. So what it seems like to me is that the anytime that someone has a foreign retirement, or actually really anything, the law seems to do something very interesting here. It seems to think that if you have money overseas and another person is involved, it's a trust. It's a trust, even if you're in a jurisdiction that doesn't have trusts. So this is really where we're having the U.S. tax code define what other countries' laws are. And this is a pretty good example of it right here. I mean, this is a very overt example where the IRS is claiming and has claimed, or is trying to claim, maybe hasn't claimed, that Swiss pensions are actually trusts. Well, Swiss Pillar 2 and 3. So with that, that's my introduction for how I got here today. I want to welcome aboard Keith Redmond. Keith, welcome today. And thanks for joining us.
My pleasure.
All right. I'm, for those who new to the channel, Keith is he's our everyman. He's our everyman who asks us our questions as John and I go off on our deep tangents. He's the one who helps out people. He's an advocate to and consulate to Americans abroad. So he helps out people deal with reality on the ground. And we always love having him aboard to get that insight that John and I are a little bit, we're a little bit out there as attorneys. We often can forget, the reality and the basic question people have. So Keith, welcome aboard. And that brings me to the great John Richardson joining us today. John was kind enough to create slides like he usually does. And here they are right here. So here we go. John, I'm looking forward to your presentation you have here. The 3520 informs.
Right. Yeah, this is so the 1619 project, okay?
Yeah.
Yeah, there is a deliberate let me, first of all, I don't know, what the answer to this is, and nobody knows what the answers to these things are, and that's precisely the problem, right? That because of all of the uncertainty out here, people say, "Oh my God," and look at what getting this wrong is going to cost me. It's going to cost me right to my retirement. So, God, I better, even if I don't think these things are trusts, I better file a 3520, and that of course can often lead to a penalty as well. I mean,
Right.
Basically, in 1996, the Clinton administration fundamentally created the predicate for criminalizing all Americans abroad all the time under all normal circumstances of living abroad. Okay, that's what they've done.
So you said it was in 1996?
Yeah, these regulations, these changes in the law, are Clinton era, as are the exit tax rules and the obscene entity classification rules for corporations. This all comes from Clinton Treasury.
Oh, okay.
If you're interested in the history of this, but again, I think it's important to remember that. So the IRS is proposing, or Treasury is proposing these regulations, which is what has prompted this discussion. And I would urge everybody to at least read the first part of it, where they also go through the history of this, making it very, very clear, upside down, sideways, and diagonally, that something like Swiss retirement plans or Canadian, or something, were absolutely not the purpose of these rules. Absolutely not. So, it becomes a question of, because somebody out there who prepares tax returns might be able to make up a reason why some normal retirement planning transaction in another country might technically meet the requirements of a foreign trust, that therefore they get into this. Okay. I have, over all these years, I have never been able to find anything on this that I regard as definitive in terms of, the rationality of the analysis. And also, I don't, I mean, you can all send me things if you think I'm wrong, and I'm sure there are people who think I'm wrong. But I really haven't found, a lot of, proclamations from the IRS, singling out these, retirement planning vehicles in other countries and saying, oh my God, you presumptive criminal, what are you doing trying to plan for retirement? One, we know that by doing this, you've created a trust, a surreptitious attempt to evade U.S. taxation, and therefore we're going to subject you to heightened reporting requirements and penalties. I have not seen that from the IRS, actually. But if you were to search this online, as I did this morning in preparing this, you'll find no end to that stuff out there. So let's, try to go through this in an anxiety-free way, because, as I finished the presentation today, I had a thought. I am not, as Anthony might suggest, a sophisticated thinker at all. In fact, I pride myself on my simplicity on this. But, it really does seem to me that the purpose of retirement planning is to reduce anxiety in life and not to create it.
There's a great point. That's a fantastic point. And I've got a great comment here. I just want to get to this comment from Melvin. Thank you so much, Melvin. Without reference to chancery and probate court, almost every investment with a bank, insurance company, etc., would be a trust because its purpose is to protect the financial interest.
I agree with that at all.
I was actually thinking about this one too. Hey, let's suppose you're overseas. And you're in a pinch, you need something to eat, and you're not sure where to go. So you go to McDonald's. You go to McDonald's somewhere overseas, and you place your order, and they say, okay, great. You pay for it, and they give you your receipt as you wait for your food. You know what I'm going to say? I'm going to say that's a foreign trust, because they're holding on to your money. They have your money, and you're trusting them that they'll protect your money and give you your hamburger, your large fry. So, I mean, it's really when we get into these things, because it seems like anytime there's someone else involved, your money, we have a trust. We have a trust. And that seems to be the bare minimum of what's required. And look, I took trust in law school, and I would say there was a little bit more involved in that. Like a trust document. A trust document would often be helpful, where people are explaining what the trust is and the purposes of the trust. But when we look at these foreign pensions, they don't say trust on them anyway. It says retirement plan. It says retirement plan. And I think, John, yeah, exactly. To reduce the anxiety of earning another day on this earth. Right. Anthony,
the language is a feature of this stuff in terms of what it's called, but it's clearly not determinative, right? Because we have things that are called trusts, like this Mexican, this case from a number of years ago. In Mexico, you have to be a Mexican citizen to own, property in certain places, and so people get around this by creating these Mexican trusts. And, one of the few situations where the IRS has addressed this, I mean, they did rule that was not a trust, for 3520 reporting requirements. Right. So the fact that Switzerland does not have a formal trust is not going to carry the day on this. Okay. I mean, this is a facts and circumstances a type of analysis. So, the question is, what are the facts and circumstances? And I don't know. I mean, here, I would urge extreme caution on this. I really would. Okay. Because I think, I don't know for sure, but it just seems to me that once you get started, see, you file a 3520, the IRS is not going to understand that to me. And why would they? Well, we're filing this, just to make sure that we don't get a penalty. No, they're going to understand that to be saying that you have a foreign trust, because that's why you file the form. Right. So, I mean, a lot of this stuff is dealer's choice. I'm not saying don't file a form. I'm saying don't file a form unless you believe it's a trust. That's what I'm saying here. So anyway, here we go. I mean, here's the sort of sum total of what I thought about this morning, right? So part one, we have income, assets, and trust. And I think it's extremely important to separate the income, okay, from the asset issue here. I think, so all income is taxable. All financial assets are reportable, unless it's real estate on the Form 8938. And there's some financial assets that are trusts. Okay. Now, I think that part of the problem here is that, people think that because, all trusts are financial assets, that therefore anytime it's a financial asset, it's a trust. And that's clearly not the case. Anyway, moving on here.
Yeah, this is for those just joining the channel, we're talking about foreign financial assets reportable. That's on that.
Yeah. Okay. Now, I do think it's worth reminding people that if you want to know what income is, you actually just start with Section 61 of the Internal Revenue Code. Okay, that has a definition of gross income that includes absolutely everything, right? All income from whatever source. Then it goes through some specific inclusions and some specific exclusions. But, quite obviously, income from these things under the Internal Revenue Code is part of gross income, unless, of course, it's excluded under a tax treaty. And while we're on this point, the U.S. tax treaty is fairly old, and it doesn't have an Article 18 like Canada or the UK. And basically, there is no relief for American citizens living in Switzerland because of the saving clause. So income from all of these things are clearly part of U.S. gross income. Now, that means it needs to be reported as income when it's realized. Okay, we'll get to that in a minute. But that doesn't solve the question of the reportability of the asset. Okay, next slide here.
Yeah, when we're done talking, and my discussion isn't about the taxability of this norm, really, primarily, but rather the reporting requirement that goes along with the taxability. The taxability is another issue that I don't know if we have time for. Okay, so here we go. Next slide. Here we go.
So since Obama, right? Okay, I mean, it's an interesting progression, right? So the Clinton years created reporting requirements and essentially created a presumption that or created a way to read this stuff so that all financial assets outside the United States are suspect. And then Obama comes along and 2010 or whatever, and creates the Form 8938. Sort of tightening the screws on that. Anything foreign is suspect and subject to special reporting. And this is Section 6038D, which is part of FATCA, and is taxpayers will recognize this as Form 8938. Now, so where we are. Real estate accepted, at least for them, unless it's part of a trust, interestingly, okay? Basically, if you're an American abroad, I mean, unless you have very little, you can assume that all your financial assets outside the United States are reportable to Treasury, okay? Remember, if you're an American abroad, you look up and, you're looking in the mirror every morning, and what's looking back at you is somebody who understands that life as an American abroad means report early, report often, report everything, and keep a record of what you report. Next slide.
Right on. Okay. I just want to check in with Keith. Keith, are you with us still? Does this make sense? And Keith, as I was, because I know we were on a Twitter post. We were taking a look at a Twitter post yesterday, basically, and where members of Tax Pros are just explaining how ridiculous the IRS is in processing things. And I have my own, and I added my own 2 cents into this. You saw things where the IRS is taking 4 years to process amended returns. People have to take multiple attempts. And so, are you kind of thinking about, wait a second, this seems pretty crazy right here. And, how do you feel in light of learning what the IRS actually is? And
I,
You know,
I mean, with everything that you're speaking of, the past two podcasts, I'm learning a lot from both of you, and vis-a-vis the nuts and bolts of trusts, et cetera, et cetera. But what I'm finding is that even when you're trying to be U.S. tax compliant, on the other end of it with the IRS, they don't know. The left doesn't know what the left hand doesn't know what the right hand is doing.
Yeah.
So I don't see how they can monitor, or even if they have to properly audit Americans living overseas with this stuff. They can't
well,
they
yeah.
can't get simple things taken care of.
Right. They can't do simple things. And that kind of gets, Melvin has another great comment here. The IRS is taking a practical approach, but what happens in this vagueness, and this is in this incredible vagueness and confusion, the tax industry will look like, well, look, I got to protect myself, and I don't want to be subject to, if I'm wrong on this, I don't want a client coming back and saying, hey, you told me I didn't need to do this, and now I have this massive, massive penalty, and these penalties can get out of control. On the 3520, 3520A, it could be a percentage of the overall value, or the overall distribution. So, I mean, talk about crippling penalties. And so you're putting a tax professional in a difficult situation where you're saying, well, tax professional could say, well, I actually don't think this is a trust whatsoever in any way, shape, or form, but the penalty threat is so large and could be so ruinous, and I could be involved in litigation. This client could come back and say, why didn't you do this? And it'll be such a mess. Well, I just better do the safe thing and file. And that's, and the safe thing, I think, is really looking at everything. If it's involving, overseas, it must be a trust. And that's really because I think, as John's properly noted and knows, these expansions of definitions that occurred. We are all very intimately familiar with FATCA. And here's, FATCA, now it's like, well, are you reporting trust? So you have kind of a double reporting. Well, not only do you need to, it's like, let's think about where you need to report your foreign trust. Well, you need to report it on a 3520A, 3520, FBAR, 8938. That's 4 places. 4 places, all each with their own penalty that they can impose. And so why do we need to report it 4 times? Because it's a penalty bonanza, is my guess. And IRS doesn't want to give up on that.
Well, on that, here's an excerpt from Form 8938, Part 4, that I think is quite interesting. You'll notice that this is accepted specified foreign financial assets. In other words, these are ones that don't have to be reported on Form 8938. You notice it says number of forms 3520, 3520A. So I think that, this can be understood that, yeah, these things are foreign financial assets. If it's not reported on a Form 3520, make sure it's reported on a Form 8938. Now, I'm not saying that I read that to be if you just report it on a Form 8938, that solves the question. But it does seem to me that the overall principle here is, report early, report everything, report often, keep a record of what you reported. Well, you take one of these things and you put it on a Form 8938, you've reported it. Okay, I mean, the only thing we're really talking about is where to report it, right? And I do believe that these things, not Swiss Pillar 1, because that's Social Security, we'll get to that in a minute, but 2 and 3 are foreign financial assets and should be minimally reported on Form 8938. What we're talking about is whether they meet the specialized requirements of being trusts and therefore are subject to Form 3520, and in the case of these other things, Form 3520A, right? That's really what we're talking about. Anyway, I think that's interesting, right? That the form itself sort of acknowledges, right, the difference, that not all foreign financial assets are the same, if you will, right? Anyway,
well, and this is what I would say, and this is why I said you have to even report, because if you don't put down the number of forms 3520, if you just file the 3520 but leave this blank, Well, you can have an IRS, for some reason, somebody gets assessed the penalty, said, well, your Form 8938 is substantially incomplete. Therefore, we're going to claim like you didn't even file it because you didn't put down how many number of forms, 3528, you actually did file in your tax return, or actually because it goes earlier. Your 3520, 3528 are actually due March 15th.
Yeah, I think, Anthony, another point on this just occurred to me, okay, is that Form 8938, my memory is that that's required only if there's otherwise a requirement to file a tax return. Okay, the Form
Yes,
3520 is one of these forms that's,
right.
that if it's required, is always required regardless.
Correct.
Okay.
That's absolutely great point, John.
By the way, also, I don't know if listeners to this are aware that these Form 3520, these foreign trust things, they go to a separate processing center,
Yes.
right? I mean, these are not normal sort of IRS forms. And, it's sort of like you send these things off, where their whole purpose is to impose penalties, right? I don't know. I mean, I think that you need to understand why your view is that these are foreign trusts before, filling out and sending 3520s. But anyway, okay, next slide. All right, so we've talked about this before. Where do these forms come from? I mean, they're not made up. They're what I call retail expressions of provisions of the Internal Revenue Code. And in this case, as a reminder, we're dealing with Form 604, Internal Revenue Code 6048, which has to do with foreign trusts. So the issue is, how do you know what's a trust, right? And you mentioned this, Anthony, that we get into the Treasury regs here now. So now, yeah. So next slide. Now, I want to pause here and add something to the discussion that I never really see. Okay. But for something now, trust is a separate entity, right? It's not an extension of yourself, right?
Right.
It's something that you go and create somewhere. And I was trying to think as I went through this. I mean, I think I sort of recognize the difference between something that is a trust and it's not. I think I sort of recognize it, but I was trying to think of how might I explain this to somebody. And here's my attempt at explaining whether something is an entity, right? Because remember, if it's not a separate entity, it's game over, right? It's not going to be a trust or any of these other things. But I'd be interested in, whether you think this makes sense. But I think the question is, I'm going to open a bank account, a brokerage account, a TFSA or something. That's not creating a new entity at all, right? That's just creating an account at some kind of existing entity, a bank, right? Does that make sense?
Yeah, but keep going.
If you're creating an entity,
Mhm.
it seems to me you need to go down to some government registry office and actually create something. Right? I mean, that's what it seems to me. Okay. Now, I'm sure that, there will be all kinds of people who would criticize that, but I kind of think that's what's going on. Now, I agree that, and this has been a big issue in Canada recently, where they imposed some completely idiotic trust reporting rules, and then all of a sudden learned that, there were all kinds of people who were trustees and didn't know they were trustees. I mean, this sort of problem, right? But I think that as a general principle, if you're going down the street and opening an account somewhere, I don't think that's a trust. Okay, that's just an account you open somewhere. It seems to me that the meaning of these trust regulations, right, and the statute, again, if you read their preamble, again, I mean, this stuff was made up to solve the problem of some resident American, going to the Bahamas, going into a law office in the Bahamas and saying, "Hi, I'm here. I want to create a foreign trust," right?
Yeah.
The paperwork and, create it, right? I mean, that's what I think is going on here. Now,
Well, it's usually, John, because you're exactly, this trust is formed under the laws of,
right.
The jurisdiction of, you look for that in a trust document.
Yeah. I found an interesting thing, and then I started thinking, well, what is the IRS view on this? And, that's kind of an interesting link there. No need to go there for now, but I mean, you know, they're talking about how to treat different types of things: a sole proprietorship versus a partnership versus a corporation. And the idea is that some of these things are independent entities and some aren't. And it seems to me that you've got to have an independent entity, to have a foreign trust. But again, I don't know. Moving on. In other words, look, my point is simply this: you have to ask whether there's an entity. If no entity, then no trust. Okay.
That it makes complete sense to me, John. That totally right.
All right. Now, so assuming an entity, a necessary condition for a trust, and you mentioned this earlier,
Yeah.
okay, seems to be. Now, what's interesting is these regulations are clearly designed to make the point that that you look at the characteristics of what's going on and not the way it's described, right? And this is why, the fact that there's no trust in Switzerland does not necessarily mean that it, wouldn't meet the IRS definition of a trust. Okay. But in any case, the idea, I think, is that so when creating a trust, you transfer assets to a third party, and the purpose of that is to preserve, grow the assets or something. And then there's another part of that discussion that also implies that when the person creating the trust has the can is not in fact turning over complete control, right? That it's not going to be a trust, right? In other words, if they have a say in the investment. So you look at a Canadian TFSA, and I don't know a lot about the Swiss system, but the Pillar 3 seems to me these are things that you create privately. I mean, if you're controlling the investment decisions and everything, I'm not sure that that's a trust. Okay. But then again, you got to look at section 679 of the Internal Revenue Code. But the point is, again, okay, it is certain what this demonstrates beyond a shadow of a doubt is that having a relationship with some foreign account does not make it a trust. Absolutely, positively not. Right. So, that's important. Okay, moving on here.
Well, John, and I guess, I'm still hung up on this idea that, okay, to beneficiaries under ordinary rules applied in chancery or probate courts. I'm hung up on that. I'm really hung up on that because how, does that mean because it's not said, they don't say a U.S. chancery or probate court. It doesn't say, but that seems mighty implied because chancery is Delaware, probate court's every other state. Now, I'm assuming there's a probate court in Canada because of the similarities between our legal systems. But I'm imagining there's many countries where there isn't a probate court. There's no such thing as a probate court. And so if it's not subject to the jurisdiction of a probate court or a court of chancery, then we're not at trust yet. That this regulation appears to be written truly for a US-based trust. That's what it appears to be. And then the later regulations came on to modify it. But my problem is this really seems to define a trust as something subject to the probate court or chancery court jurisdiction. And if it's not, can't be a trust.
Yeah, something like that. I mean, clearly that language, chancery court, is relevant. Chancery courts are historically courts of equity, right? The common law system. And courts of equity were created, okay, basically alongside the common law courts because of the injustice of applying the law, right? They were a recognition that we need this other parallel system of courts, which has something to do with fairness, etc. And eventually these things were actually merged, right? But historically, they are different. And the notion of a chancery court or court of equity is to look beyond formal legal structure with a view to trying to incorporate some degree of fairness and morality. What I think this means here is that if you don't have a situation where a trustee doesn't have a fiduciary duty, that is a responsibility to run everything for the, by the letter of the law and for the benefit, to the benefit of the beneficiaries, then you're not going to have a trust. And the whole notion that, in Canada, for example, somebody goes to the Bank of Montreal and opens up a TFSA, the whole notion that they're going to manage that is such indescribable bullshit. Okay. I mean, all these things are just accounts, right? I'm going to go down and open a TFSA. You're not creating some kind of a separate entity where somebody's looking after your stuff at all.
Right. It's an account
So
inside.
I don't know. Look, I don't know the answer to this. Okay. But more significantly, I've never really, looking at, I've looked at this a number of times over the years. I've never found anything written by anybody that I think is at all, thought out in a way that I think it's reliable on this stuff, right? And I think that tells you something. But anyway, moving on.
Yeah, right on. And I'll just Melvin's.
Now, Swiss Pillar 1, 2, and 3. First of all, I don't know anything about Swiss Pillar 1, 2, and 3. All right. I don't.
You do. I think you do. I think you do. You just put it here, right?
Well, other than that, right? I did listen, though, to an interesting presentation where a U.S. financial planner in Switzerland was discussing this. Her name is Miss Ariel Tucker, and the website was connectedfinancialplanning.com. And I found it interesting because in the presentation, she discussed, how these things actually operate and what they really mean. And, and I think that when you're trying to decide whether something is a foreign trust, I think the issue is like, what's really going on here under the hood, the nuts and bolts, like, what does this stuff really mean? But there are three components. So Pillar 1 is just, your state Social Security. I'm not even sure whether any contributions are required, frankly, on that. But whatever it is, here's the key point. There's no contractual relationship between the government and the beneficiary. So there's no way this is a foreign financial asset of any kind because you don't have a contractual right to enforcement of it. And that type of thing is not going to be reportable on Form 8938 or anything. And, although when you get the income, of course, it's going to be taxable. The second Pillar 2 seems to me to be something like a 402B plan under the Internal Revenue Code. In the same way that it seems to me to be sort of analogous, not identical, but sort of analogous to the Australian superannuation type of thing, right? Where you have mandated employer contributions, etc. Now, on that point, okay, of the analogy to the 402B, if that is a viable analogy, 402B specifically states that these kinds of employee trusts or whatever they are not grantor trusts, okay, within the meaning of the Internal Revenue Code, right? Which suggests no reporting on that, right? If that's right. Pillar 3. These are the private things that you set up yourself that are, have clear analogies in other countries. In the UK, these private pension plans, etc. I don't know. Obviously, I think that there are circumstances that you could set them up as a trust. You go into a financial planner and say, here, we're going to, for my Pillar 3, I'm going to turn over complete control to you. You're going to be my trustee to manage this. I suppose it could be a trust, but I don't think it has to be a trust either. Okay. So, sort of continue. And there's a link to it. I thought.
Right, so John, this is where my brain is going here, because we were talking about entities, and I was just sort of thinking, one of the big reasons why people form trusts is for asset protection. Create a separate entity that's not you. So when you do something stupid, your trust can't be sued because it's a separate thing. There's a separateness to it. And so as I'm going through this, I'm thinking that how are these separate from the individual. That is, if you sued the individual, what level of protection is there between the individual and the retirement asset? Is this really a separate thing, or is it just an investment of the person that the person owns? And it really seems to be more that than an actual separate entity that has its own, that allows you to divest yourself of assets, so that in the case of litigation, you won't lose those assets, but you can still remain a beneficiary of those assets.
Right. Again, you make a very good point. I mean, what you're saying is that maybe, that not all these things are entities, right?
And I think we don't even have an entity yet. So how did we get to a trust?
Well, that's right. I mean, I think we would agree. I think this is crystal clear, okay, from the regs, that without an entity you can't have a trust, right? Or anything else. These entity classification rules assume you have an entity, and then the question is, how are they classified and how are they taxed? If you don't have an entity, then you don't have this then just think, bank account or brokerage account, right?
That's your entity, right? And hey, there's your entity, right?
Why don't people take the position that a brokerage account is a trust? Well,
exactly. It's the same thing.
Yeah.
The only thing it doesn't have is a tax advantage status.
Yeah,
but it's the same. It's the same thing.
Yeah, or to put another way, and I think that this may be helpful. The way that something is taxed does not define what it is necessarily, right?
Yeah.
Anyway, moving on.
We're moving on.
Well, first of all, this is just my view of this, and for people who know me, you'll know that I have a general predisposition against over-reporting. Okay, I think the position of these things are not trusts, any of them, is perfectly defensible. Pillar one, obviously, it's not even a foreign financial asset. It's just Social Security. The income's reportable if you get it. Okay, but you don't have these kinds of issues. Occupational. Again, I want to say I'm not saying that what I'm saying is right. I'm just trying to provide a mechanism for how to think about this, and you can reach your own conclusions. But the occupational one seems to me to be more like a 402b. Okay, from a U.S. point of view. I don't. If it's a trust, right? Even if it's a trust, right? The Internal Revenue Code suggests that it's not a grant or trust, right? Sort of thing. If it were a U.S. analogy, so I think you're probably out of the issue on that one. Okay. Again, income is always reportable. The real place that's open to discussion, we just had the discussion, is these private ones, right? That people, the people create. I mean, I just had another thought here. Does it really make sense, Anthony, to take the position that something that you're absolutely positively required to have, that is open without your consent, that is available to you in another country because you live there? How is that a trust?
I was thinking of the same thing. I was just going through my mind. I'm like, this is required by law.
Yeah.
You have to do this. It's a condition of your employment. And it's required to save for your retirement. And it doesn't have anything to do with someone else making all the decisions and creating a separate thing separate from you.
Well, it also, Anthony, it also is not. Go back to their original justification for this. Nobody's setting up a pillar one and a pillar two to offshore assets.
Right.
I mean, the idea of it is just so completely idiotic.
Right. Yeah. That's not what you're doing, right?
Just look at this in terms of, the purpose of these grant or trust rules and the reporting. And, this stuff has nothing to do with that at all. Nothing to do with it, right? I mean, it's confusing a possible technical application that was never even considered in putting the law together, right? So, on the private one, I mean, I would be very careful. If this is allowed in Switzerland, I'd be very careful to make sure it just has the characteristics of some kind of tax advantage savings account, right? right, or investment account.
And that's what it is. That's really what it is.
Well, if that is what it is, right? Remember, I don't, I've never lived in Switzerland. And I think
That's what it is. I mean, that's really what it is. It's just a tax advantaged, it's basically opening up, your own 401k, simple 401k. It's just basically just that. That's all it is. Now, I would say this, that I did notice that when it comes to domestic retirement plans, that the IRS does consider those to be trusts, but it's specifically, and the filing requirement is the 5,500 that goes to the employer.
Well, they do, yeah, on the 402B, right? I mean, they consider them to be, employee trust or something. I mean, I agree with you. I mean, I think it's confusing, but here's the thing, right? I think that this stuff, remember, we're talking about whether it's reportable on 3520. That's what we're talking about.
Yeah.
Ultimately.
Yeah.
And it is inconceivable to me that if you look at the background of Internal Revenue Code 6048 and these reporting rules, it's inconceivable to me that it was ever intended to apply to this type of stuff, right? So, I mean, should the tax preparation industry say, oh my God, look, the IRS, the Treasury overlooked this further application of this stuff? We know all Americans living outside the United States are by their very nature offshoring their foreign retirement plans to cheat the IRS, right? I don't know. Next.
All right. Okay.
Now, there's an EY analysis out there, and I think you saw this, Anthony. I don't remember exactly what they say, but I looked at it.
Oh yeah, I did look at it. Right. And yep, I did. Yeah.
And I don't. I think it's worth looking at. It's typical compliance perspective, right? There's nothing on the purpose of. Maybe we'll go forward, and then if you want, we can go back and look at their analysis, see how it compares. But so moving on to the next, though.
Yeah. Here, let me just get that link up. Try to get that link extracted, or I'll move to the next slide.
Yeah. So possible conclusions, and I emphasize possible because, I freely admit that I don't know. Okay, but I also don't think anybody else knows this particularly, right? So there's a lot of just confusion and try to do stuff. And I think that when in thinking about stuff, I've adopted two general rules of life, okay, for how to think about problems. And I want to introduce these here into the discussion. Maybe we'll use these two rules again. The first rule, in my view, for how to think about things is focus on what we do know, not on what we don't know. Okay? So we're going to focus on what we do know here. And Pillar 2 and Pillar 3, they are foreign financial assets, so Form 8938. Okay? Pillar 3 is probably reportable on an FBAR because you set that up yourself as well. Right. I'm not so sure about Pillar 2. So let's say that we know. Now, the second rule, which I didn't put up here, is what I call in life, when you think about stuff, the smaller the step, the bigger the result. Okay? So let's not let it get away from us. Okay, let's just take small steps and see where that takes us. Now, I would point out that the Swiss pension system has been around for an awful lot of years before 1996, and I don't believe that it was ever considered to be suspect. Okay? And then, so the question becomes, can the Clintons come in 96 and impose a bunch of rules that, seem in no way connected to this stuff and somehow turn, pillars, no pun intended, and traditions of Swiss society into suspect entities? I mean, that is just such indescribable bullshit that only a somebody who tries to look at this in the here and now without any sense of the history of any of this could possibly reach that conclusion. Okay, so next. Now, this is responsive to the comment that was just on the screen.
Yeah,
Let's
right.
talk about the
Yeah.
tax preparation industry. Yeah, okay, so leave that comment up while I talk about this. When this whole thing blew open in 2010, 2011, it became very, very clear to me that the principal role of the tax professionals was to create the law. Okay, I mean, nobody knew. So, they would just make up the law. I mean, I've been at this for so many years now. It's not that I'm not saying that I know, understand, or have the answers. But what I am saying is that there's no evidence that the tax preparation industry does. Okay? No evidence at all. Right? In fact, I think it's generally the opposite.
Keith, do you have any comments on that one?
I don't know what to say.
I guess and I noticed I've been around on this for a while. When we started this, I was definitely reporting everything because of the penalty exposure, and that's really the focus. And I was like, okay, the IRS is going to penalize this. I'm not necessarily interested in the law because the IRS is going to penalize this. And so, what do I tell my clients? Like, well, the law doesn't matter. The IRS is going to penalize you, so we're gonna create these things. And so, and I've noticed this. People who've been around as long as I have, some of their information has removed from their website. Just like I've taken down articles. Other people have taken down articles on various things, claiming what things were too. So I think there's maybe a larger awakening going on. People who've been doing this for a bit of time about what the IRS said things were, what they ended up doing, and then when you look at defenses to this. That these regulations they don't really seem to have much of a purpose other than to penalize, but that is the nature of our taxing regime, right? That's a hit you have.
Yeah, so you look at this, right? And so the tax preparation industry, and this is not, this is an observation. I mean, I have many friends who are in the tax preparation industry, right? But I think in fairness, that they create the expectation for how foreign financial assets are to be reported and therefore penalized. And I think my advice would be, do not let the tax preparers turn your retirement plans into vehicles for IRS penalties.
Yeah.
I think that's not a bad starting point. Now, the comment here says, but the TAR are the ones that push the boundary. Yeah, that's right. That's something I'm seeing more and more. A good discussion this crew recorded. I mean, I'm sure that whatever we're saying today is consistent with stuff we've said in the past. Again, I want to emphasize, Anthony, that I don't have any special insight into this. I really don't. Okay. But I see a lot of injustice, penalties, and mistakes out there. Okay, and I've seen a lot of people who've been penalized precisely because they have filed 3520s. So it's not the case that, well, there's no harm in filing it. I simply do not buy it at all. I think that there can be harm. So. Is that the last slide, or is there one more here?
Let's see here. I got one more. Yeah.
Oh, yeah. No, here's some. The title of this, actually, I think this is one of the better thoughts I've had on this, right? Which I think sums it up. Retirement planning is supposed to reduce anxiety and not create anxiety. I mean, look, this is absolutely insane. Are you telling me that because somebody is born in the United States, they have to worry about whether they're going to be penalized for participating in responsible financial planning? I mean, that is not even. And
it's the worst anxiety. I mean, you talk to people all the time, every day, and the amount of anxiety people have over this. And, people who, no intent they're trying to be in compliance with the law. And the amount of anxiety that this is creating, that's such a great observation, John, that
right. Yeah, I mean, there are those that are trying to be in compliance with the law, and then there are those who don't see any incentive in being in compliance with the law because of all this stuff, the reporting and everything. So you got that going on as well.
Well, yeah, yeah, of course. But I mean, I think in fairness, I mean, we're talking about the people who are,
Of
trying,
course, I get
trying
it.
to comply, that sort of stuff. And I don't know. I mean, if you are pressured by a tax preparer to file a Form 3520 or some other information return, I think in fairness, it would be worth asking why. Okay. I mean,
Let me explain it to you. Oh boy. Oh boy. Yeah. Why?
I mean,
Well, we gotta.
yeah, you see, these forms are required when there's a suspicion of tax evasion.
Yeah.
I mean, that's what they're about, right?
Well, and here's, Mel, the comment we're saying, if everyone agrees a foreign pension needs to be reported on Form 8938, and if the individual pays all its U.S. taxes, why would the IRS be interested in Form 3520, 3520A? What for? Well, I think, Melvin, you know that answer. Melvin, you can answer that question. You've been watching this for enough, because of the penalty bonanza. That's why all these forms exist. There's no value. Right? I mean, just like the FBAR, there's no value to a filed Form 3528 to the IRS for,
Well, there is, because they can make up a reason why it's missing information or something.
Well, the reason, I mean, there's no legitimate reason for it other than, hey, look, we can penalize you and make your life hell. And part of our
Melvin makes a good, a good sort of summary point here.
Yeah.
It is an indisputable fact, at least I believe, that Pillar 1 and Pillar 2 are foreign financial assets. Okay.
Pillar 2 and 3, you mean? Pillar 2 and 3.
Okay. Yeah, 2 and 3. Okay. So Form 8938. Okay. You've reported the thing. That, I think, is clear. Remember our rule of how to think about things: focus on what we do know, take small steps, right? That stuff we know. The Form 3520, I mean, if we can't even figure out whether the damn thing is required, why are we filing it?
Yeah.
At least that would be my thought on this. Now, remember, though, I'm not a tax preparer. I don't sign tax returns, so it's easy for me to sit here and say this stuff. But on the other hand, I'm one of the few people who probably can say this stuff because I don't do that. I'm not a tax preparer.
You're not, you're right. You're not boxed into the anxieties of a tax professional.
Well, that's right.
I mean, they have their anxieties, and you look, they're found. I mean, they're not unreasonable anxieties.
No, they're not unreasonable.
Not at all. So right, we have the taxpayer has anxiety. The tax professional has anxiety. I guess the only one who doesn't is the government. They're fine, right? Because they could just create vague rules that they don't really know what they mean, and they miss steps again because we don't see the entity. You have a trust without an entity. How is that? Well, you have an account. That's your entity.
You're not going to be able to have that. But it does occur to me there's another inference, and maybe you won't like this one, Anthony, but there is another inference from all this, and that is, don't use tax preparers. File the damn things yourself.
I'm not so averse to that as you think I would be, because there are so many dangers in using a tax professional. The problem is that we have a tax code, and honestly, you need commercial software. Usually, you have problems with and that's often the times why you need a professional, because TurboTax won't do it for you, and you don't have access to the right license. So that's often why people who could do it themselves really can't. But I agree with you. If the problem is people think there's some protection by going to a tax preparer, and that hey, look, I use an experienced tax professional. Don't penalize me. No, and here's the real truth of it. It's very, very rare for the IRS to ever assess tax preparer penalties. Incredibly rare. And I actually wouldn't see them to be able to do it in this case because there's a whole process they have to follow, where somebody, they have to prove something for sure. And with all of these, we can prove this is all vague, and the IRS doesn't have strong standing to say do that. And that's why they don't bother penalizing them, because tax professionals often fight back a lot more. And I've seen this. A terrible tax professional will also often become super attorney when it's his butt on the line. You're like, well, where was this before? If we only had that amount of hustle before, we wouldn't have to be here. So it's very, very rare for them to do so. But they will. The IRS will 100% penalize a taxpayer who honestly doesn't know what's going on and why things were filed. Why was the 3528 filed? Don't know. But okay, you're going to penalize me.
Look, those Americans abroad who can renounce U.S. citizenship should. Okay? I mean, this is absolutely insane. The U.S. tax system has turned the most normal and necessary aspects of life into sources of anxiety, penalties. Nobody should have to live with this type of stuff, period.
Yeah, you're absolutely right. Well, I think we're now we were gonna, what are we gonna cover next? I know we were talking about it yesterday. We got something coming up next. What do we want to go over, Keith? You know what it is?
Wasn't it, John, what you tweeted out yesterday about France? What was that you tweeted out that I posted?
Oh yeah. Here, closing. This is really interesting, right?
Yeah.
You know that. So a U.S. citizen living in another country, let's say Switzerland, since we were talking Switzerland today, they're required to pay tax on their Swiss source income to the IRS, right? But did you know? And by the way, Switzerland's another sovereign country, right?
I've heard that. Yeah.
That a U.S. citizen living in the U.S. territory of Puerto Rico,
Oh, right. Yeah.
not required to pay U.S. tax on Puerto Rican source income.
Right. Yep.
Now pause and let that sink in for a minute, okay? So you live on, let's say you live in the state of Massachusetts on Foreign Trust Avenue, right? And you have two neighbors on Foreign Trust Avenue. One of them moves to Switzerland. The other moves to Puerto Rico. The one who moves to the foreign country is required to report income source in that foreign country to the United States. The ones who move to the U.S. territory of Puerto Rico is not required to report Puerto Rican source income. Now, does that make sense to you?
Well, that's why there are different levels of U.S. citizenship.
There you go. Right. The equal protection clause doesn't apply when it comes to taxation. It's anything but equal. It's all, well, I mean, equally awful. I mean, but how its awfulness applies to you will be very unequal. Which now, you know what? So I think next week would be a great time to talk about Puerto Rico, because oftentimes people in Puerto Rico think that their worldwide income isn't taxable. Your Puerto Rican income is not taxable to the IRS, but if you have worldwide income, like say maybe even you have some investments in neighboring islands, that is, and you might be in massive noncompliance and subject to massive penalties. And I think to tie up what we were talking about, Keith, and the Twitter post that we were referencing, just how bad the IRS is, how bad it is. And there was somebody, and I don't know if I responded, but because I was mentioning to someone, who's like, oh no, my tax. I said, well, why don't you just file a claim with a taxpayer advocate to help you get your returns processed? Right. And then I said, mine. He goes, well, I said, you can file. You don't have to file it where your client is. You can file it where you are. And so I file my request with the Hartford office, which is pretty good. They'll get back in 3 weeks. Which is a lot better than others. And they will actually, they have the staff, and I have a long history with them, and they help me out. And he says, he goes, my local office is Baltimore. I'm like, oh boy. He goes, yeah, it's not worth filing. And so then this is a little hack that I found out years ago. By accident was a little easier to make this one by accident. If you call the IRS and you're looking to speak to someone incredibly intelligent, the hack is this: press 2 for Spanish. Press 2 for Spanish. Yeah, it's absolutely true. And here's why: because all of those calls get routed to Puerto Rico, and all of those Puerto Rican speak both. They all speak English perfectly and Spanish perfectly. So, and I think they put something in there so this doesn't happen. But when you call them, first of all, there's no hold time. And then this is the critical thing. In Puerto Rico, working at the IRS is a good job. So the IRS gets great resumes from some of the smartest, hardest working people in Puerto Rico. And so they actually have the best service center in the country, or kind of outside the country, is in Puerto Rico. And so I actually did this, and I'm going to throw this out for suggestion for anyone watching, because I do see we have a lot of followers on Twitter. There is, and I did look this up. I didn't post it, but I looked to see, well, what is is there a Spanish version of the form 911, which is the form that you can request taxpayer advocate assistance? And the answer is yes. And then I looked at the instructions, and yes, it does get forwarded to Puerto Rico. So I would say this: if you are looking for taxpayer assistance, I haven't done this myself, but I would recommend requesting that in Spanish, and you will get a far, far greater level of service than you can get as an American. And there we go. There's another example of how to get the right service. Just pretend you don't speak English, and everything's going to be okay. So with that, I think I want to just give thank you, Keith, so much for getting us together. And Keith is absolutely critical in helping people around the world reduce that anxiety, as we're talking about. Because what Keith does is he's not a tax professional. He's a reality professional. And he's a consulate advocate to Americans overseas. He runs the Facebook group here, and he really helps people figure out what to do, because you're going to hear something from a tax professional that might say, whoa, what am I going to do here? Before you do anything that's a little crazy, maybe reach out to Keith. He could really help you out. Let me get his email up here: US_advocate@outlook.com. Now, if you are thinking about upgrading your U.S. citizenship by renouncing your U.S. citizenship, you can reach out to John Richardson at citizenshipsolutions.com. John is really one of the masters who really understands the incredible intricacies with all of this. And I think you guys have he's demonstrated his depth of knowledge at this, and his true concern. So you can reach out to John for that. Here's his email: citizenshipsolutions@protonmail.com. By the way, I've gotten a lot more active on Twitter. You can follow me there at IRS, and I have IRS Medic there's a hyphen between IRS, or IRS_medic at Twitter. Also, John, you can find him at Expatriation Law, Expatriate Law on Twitter as well. So with that, I want to thank both my guests today for a fantastic episode. I want to thank everyone for joining today. Our views are going up. And I'm really, really enjoy seeing that. That always puts a big smile on my face. This is our biggest non-More versus US podcast right now. So very, very excited about that. We keep on growing, and please tell your friends about us. Join a lot. I know we have a lot of professionals on here, and I know we have some really brilliant people, and I truly, truly appreciate all your contributions as we go through this entire ridiculous thing together. This is Anthony Parent for John Richardson and Keith Redmond. Thanks for watching.